Hello and welcome to Startup Street. I am Shruti Mishra. These are the top headlines from the startup space. SoftBank is likely to have sold 1.7% of its over 3% stake in food aggregator Zomato for close to 947 crore rupees. CNBC-TV18 had previously reported that SoftBank was looking to power its stake in Zomato. Another senior level exit at Byju's. CEO of subsidiary White Hat Jr. has resigned. Comes just a day after Byju's chief business officer and two vertical heads put in their papers as a fallout of restructuring at India's most valued startup. PharmEasy is looking to restructure the $300 million loan from Goldman Sachs. Reports suggest the e-pharmacy player is in talks to turn part of the debt into equity ahead of its upcoming rights issue of about $400 million. PhonePe forays into stock broking and distribution of investment products with its new platform share.market. CEO Sameer Nigam says the move marks the completion of offerings in the Walmart-backed company's financial services bouquet. Chipmaker NVIDIA and tech giant Google expand AI partnership. NVIDIA's generative AI technology used by Google's DeepMind and research teams now available to Google Cloud customers worldwide. Well, those were the key headlines from the startup world. On the hot seat today, conversational AI platform Haptik began its journey in 2013 and it now has a market share of around 30% in India. The company, which uses generative AI-powered conversations to help brands interact with their customers, is anticipating a growth of 100% on a yearly basis for the next 3 years. To speak about their growth journey, joining us now is Akrit Vaish, the co-founder and CEO of Haptik. Akrit, welcome to Startup Street. You've been on a decade-long journey of AI-led innovation in India. You started as a business-to-consumer brand that built personal 24/7 assistants before venturing into B2B SaaS following the acquisition by Jio. Akrit, talk to us about the journey so far with the advent of generative AI. How are you leveraging that to scale even further?
Yeah, thank you for having me. While you were just talking about all the different phases, it's been quite a ride. And I often tell people that we've been trying to build ChatGPT for the last 10 years. That's a summary of, what Haptik has been trying to do. But, it's so ironic that for us, this last year, the 10th year, has actually been the most exciting, as well as an inflection point in our journey with the explosion of generative AI on the scene. I don't have to explain to anymore to people what a chatbot is, what a chatbot does. I think everybody's used it, everybody's familiar. And more importantly, from a technology standpoint, large language models, generative AI have given us all really a platform to build so many exciting things on top of. This is the work that LLMs have accomplished, which is either OpenAI or Google or any other companies, are years of R&D that's gone in, which now is available for all of us as solution providers to build on top of. So it's been an exhilarating ride, but the last few months have probably been the most exciting, and that makes the months and years to come even more appealing.
All right. Akrit, what's the growth you've witnessed for your offerings? If you can share some interesting use cases. And, it is the 10th year, but what is the 5-year growth plan for you? And if you could also share some revenue targets.
Sure. We have now been growing 100% year on year for the last 5 years. In a couple of years, in fact, it was about 150%. As any good SaaS company would tell you, I think doubling year on year is really the bare minimum expectation sometimes, even in these markets. And in some years, we've beaten that. Our idea is, continue down that path. This year, again, we're looking at close to doubling. The next year, hopefully even more, given, just everything in generative AI that we're building today will finally catch on in terms of customers closer to next year. So next year, we're looking at even a faster growth. From a 5-year standpoint, we have 3 goals. First is a product goal, which is that we want to power, 1 billion AI-driven interactions a week Currently, we do a billion interactions a month. We want to get to a point where we power a billion AI-driven interactions a week. Second is from a global standpoint. Currently, we operate in about 6 countries.
Yes.
We want to be present in
15?
20, if not 25 countries, most of the developed world where software is bought and sold. And then finally, the third is, revenue and profitability metrics. We are profitable, or close to at least, depending upon the month. And revenue-wise, the idea is, we hopefully will cross 100 million in annual subscription revenue soon.
Sure. Akhil, before I let you go, one final question. You've also announced the launch of a WhatsApp chatbot called Haptik. Now, this chatbot will allow users to request 5G connections. However, these requests will be fulfilled based on the device compatibility and geographical proximity. If you could quickly talk to us about this offering, what's the need, that you're catering to?
Yeah, it's one of the most exciting pieces of work that we've done in all these years. Essentially, the use case is that all of us are using 4G devices primarily, and we are on 4G SIM cards. And as Jio, being obviously our flagship customer, is launching the 5G service, what this chatbot will do is seamlessly allow you to port over to 5G as a service. Now, while porting over, you'll have questions around whether my device is compatible. How do I get a 5G SIM? What are the 5G benefits? What are the 5G tariffs? And finally, how do you actually make the transition happen? So this chatbot, powered by, again, generative AI, is capable of answering all of those questions customized to your device. So we detect what device you're using, where you are, and based on that, tailor the experience to make a 5G transition absolutely seamless.
Okay. All right. We've completely run out of time, Akhil, but wishing you the very best for all your growth plans. Thank you so much for joining us on Startup Street today.
Thanks for having me.
All right. Moving on to a CNBC-TV18 exclusive. MediBuddy has just announced an $18 million funding round, and Ritu Singh caught up with the company's founder to chat about it. Over to you, Ritu.
Health tech platform MediBuddy has just announced an $18 million funding from its existing investors led by Quadria Capital. Now, this funding comes more than a year after MediBuddy had announced a $125 million Series C funding in February of last year. The idea is to use these funds to make strategic acquisitions to fuel the company's growth in the next few years. Joining me now to talk about this fundraising and a whole lot more is the company's co-founder and CEO, Satish Kannan. Satish, thank you very much for your time here on Startup Street. If you could start by telling us about this $18 million funding. What is the total funds, firstly, you've raised so far, and how's the company valued? The last number we'd heard was $470 million.
We got around $18 million this time and continue to scale. So overall, the company over the years has raised close to $200+ million. And we continue to invest further and further to ensure that we continue to remain the largest digital healthcare platform in the country.
Okay. Any word on the valuation?
So we continue to be valued very well. So today we reached close to $500 million in valuation. And see, in our mind, I think it's more important to ensure that we help a lot of people, and valuation is a byproduct of the work that we do.
All right. In that case, you brought up strategic acquisitions, and you made a bunch of them in the last couple of years as well. Is there anything on the table for which this $18 million will immediately be used? Will there be more than one?
No, absolutely. So as we speak, in the recent past, we have completed 2 acquisitions. One was called Clinics, which actually helped us foray into Tier 3 and Tier 4 cities. We also did another acquisition, which was called V Health, which was actually an arm of a US-based company called Aetna. And so these are 2 recent ones that we did. So this investment of 18 is another investment capability that we have to look at new opportunities. And this will be looked primarily in chronic disease management programs. So think diabetes, think hypertension. So build products as well as solutions. Customers and companies which are building products and solutions in these areas, we want to sort of look at them.
Have you already identified these companies? And it sounds like you want to, target companies that have a last mile reach. You're looking at Tier 2 and beyond cities.
Yes. So we look at both, right? We look at what is called as breadth and depth, right? So essentially, capabilities in specific disease as well as clinical areas, which is how we want to look at. Let's say it can be diabetes, it can be hypertension, it's around women care, it's around weight management, it's around mental health. So these are certain focus areas that's very, very important for us in the process. And then we'll also look at areas across the spectrum. We have, as we speak, 2 companies in conversations, and we will let you know as we have more visibility on the details.
But I wanted to understand the strategy for growth.
Yes.
Is organic growth a larger challenge than we think? Because most of your growth, as you said, has been coming from these inorganic acquisitions that you've made in the last couple of years, and you're looking to make more as you build your growth over the next few years.
So actually, it's like this, right? Every company has to look at growth from 2 lenses. One is organic growth and one is inorganic growth. So we have been growing organically for a very, very long time. It's only in the recent past that we have looked at inorganic as an opportunity to sort of do that. We already have a lot of customers who are coming to MediBuddy today. We have close to 3 crore plus Indians who continue to use MediBuddy today. So today inorganic's contribution is sub 20-25%. It is still not the core business.
There's been a significant growth in revenue year on year as of FY22, but losses have also increased almost 2.4 times compared to the year before.
Yes.
Tell us where you stand at currently.
No, good. So actually, what you said, right? So there's a stage called investment stage. So the last 2 years, we significantly invested in our core business, and that continued to do very well. So today, why do we have this confidence to do inorganic acquisition is because our core business will actually turn EBITDA profitable in the next 3 quarters, and that's also the reason why we are more confident now. So from a company point of view, for us, EBITDA profitability and PAT profitability is actually very, very close. We want to be a company which actually becomes profitable and continues to stay profitable. So that is also the reason why we need to have a right mix between growth and profitability, and large companies should continue to do that. In the last couple of years, we were focusing on aggressive growth. Now we will actually find the right balance between growth and profitability. Over the next 3 quarters will become EBITDA profitable, and then give us another 2 quarters from there, we should become PAT profitable, and we'll continue to stay profitable.
All right. Satish, before we let you go, I wanted to address a larger question as well for the industry.
Yes.
The government has been increasingly focusing on the e-pharmacies. There's been a crackdown to prevent any misuse, mis-selling of products, etc.
Okay.
What is the latest as far as your conversation with the government is concerned on the matter? Because the industry is quite worried about this legal and legislative action potentially.
Yeah, so I have like 2 views to this, right? One, let's put the high level view. See, every new industry that has evolved in the new technology enabled era has had to go through one round of legal, let's call it
Trial by fire.
Trial by fire, right? Why? Because most of our laws are written many decades ago, sometimes many years ago, and how they adjust as well as accommodate the new age technologies is one important reason. So that's exactly what's happening in the pharma industry today. So the guardrails are necessary to ensure that all the stakeholders in the ecosystem are taken care, and more importantly, the patient as well as the doctors are also supported. So I think very good conversations as well as dialogue is happening between all of the technology enabled players as well as the government. I think we'll definitely find the right midpoint. Government wants to ensure that they want to protect the patients as well as ensure that the right medicines are provided to the people, as well as there is no misuse at any level by anybody, right? It can be a pharmacist, or it can be a delivery chain, or it can be a supply chain, or it can be a patient. So the guardrails are being suggested, and how do we implement these guardrails given the technology construct is what the government is working towards, and then we're all supporting in that one.
All right, Satish, we hope to see some resolution in the matter.
Yes.
And congratulations again on your funding, and we'll wait to hear on your strategic M&A announcements very soon. Thank you very much for your time here on CNBC-TV18.
Absolutely. Thank you. Thank you for your time.
On that note, it's back to you guys in the studio.
Thanks, Ritu, for that. But it's time for us to take a short break. Coming up next, PhonePe forays into stockbroking and distribution of investment products with its new platform, share.market. We bring you a special interaction on the other side. Stay tuned. Welcome back to Startup Street. Sequoia and Tiger Global-backed healthcare unicorn Pristyn Care is battling patient backlash, alleging that the company has been pushing patients to opt for surgeries and its doctors are judged by their ability to convert consulting outpatients into surgery customers. Quick background. Pristyn Care partners with hospitals to lease infrastructure such as operation theatres and leverages digital marketing and a large sales team to convert online search queries into consultation and surgeries. Now, across a host of specialties such as gynecology, ENT, urology, orthopedic, dentistry and others. Now, remember, elective surgeries differ from emergency surgeries and are planned in advance, and patients tend to consult multiple doctors. Now to the case in point, as reported by Mint. 47-year-old Mumbai-based bank employee Amita Panchal on 20th May underwent a procedure of insertion of an intragastric balloon as recommended by Pristyn Care doctors and surgeon. Now, according to Mint, the patient felt pain and discomfort after the operation, and when it did not subside even after 2 days, the family wanted the doctor to remove the intragastric balloon. On 24th May evening, the endoscopy was performed. However, on 25th May morning, Panchal passed away. Now, what transpired next raises some unsettling questions. While the family alleges that there was a deliberate delay in the removal of the balloon, when CNBC-TV18 reached out to the founder of Pristyn Care, Harsimar Singh, he said, and I quote, "We firmly refute the claim that the quality of care given to the patient was impacted by insurance factors. We want to make it absolutely clear that the pre-authorization process was completed well in advance of the procedure, eliminating any possibility of delay due to insurance matters." Now, furthermore, concerning implants, even after removal, insurance coverage remains applicable, rendering the suggested conjecture baseless, end of quote. The founder further added, and I quote again, "Our assessments are through accounting for medical history, risk and conditions alongside transparent communication and consent. Every surgery is evaluated by our 60-member medical directorate team. Our exceptional digital NPS score for surgery stands at 62, which is significantly higher than the industry. We take pride in our robust patient support workforce of 1,200 plus members, providing guidance through doctor consults, diagnostic support, insurance clearance, hospital admissions, patient transport, discharge, 2-month post-discharge care, and any follow-ups post-surgery." Now, this unmatched support network is non-existent in any healthcare institution in the world, end of quote. Now, the deceased family has not filed any complaint against Pristyn Care, and when asked about the delay in posting FY22 financial statements, the company said both statements will be filed before the September 30, 2023 deadline. Moving on now. Fintech giant PhonePe today announced the launch of its stockbroking platform share.market. The app went live today with stocks, ETFs and will soon add F&O and other segments. CNBC-TV18's Ritu Singh caught up with Sameer Nigam, co-founder and CEO of PhonePe, and Ujjwal Jain, the CEO of share.market, to understand the company's aspirations in the intensely competitive stockbroking space. Take a look.
Well, the $12 billion fintech giant PhonePe has had a slew of launches and announcements this year across payments, financial services and even e-commerce. But it says this is its biggest launch yet. Today, PhonePe has announced its foray into stockbroking with its app share.market. Sameer and Ujjwal, thank you very much for being here on CNBC-TV18. And Sameer, I'll start with you. What are your aspirations with this product? You said it sort of completes your bouquet of financial services at PhonePe.
Super excited because we always said send, spend, manage and grow. The 4 journeys of relationship a consumer has with money. The send, spend and manage part of it we've already solved for on PhonePe. Consumer lending being one missing piece, but we'll get there soon. But when it came to actually growing your wealth, we felt that the experiences needed to actually have a winning product required us to have another app, and here we are with share.market. I'm extremely bullish that with Ujjwal and Sujit and team, we have the winning combination of entrepreneurial talent and IP that we can develop around and differentiate ourselves over the next few years.
Ujjwal, a lot is resting on your shoulders. So tell us, you're entering this market which is full of a lot of players in discount broking and traditional players. What are you doing differently? What are your plans for the app?
So we took a view that from a DNA standpoint, there are market opportunities out there in broking business which has not been solved for at scale, which is around like how do you bring value when people transact on stockbroking platforms.
But Sameer, that said, let's say the top 5 players in the market between Zerodha, Upstox, Grow, etc., they've cornered not just a large market share, almost 60% or so of, say, NSE's active clients. What kind of inroads can you make into this to capture a larger market share? And I know you've just launched, but what's the target here? I mean, how much can you get?
If you go back even 5 years ago, when Grow was launching, Zerodha was less than 20%. Everyone said the incumbents are going to dominate the market. Where's the market? Between Grow, Upstox, and all the other folks in the last 4 or 5 years, they've quadrupled the size of the market, at least in terms of cash. If I look at even the trading community, it's 6x'd in the last 5 years. 9 lakh or to about
45 lakhs.
45 lakhs now, right? 5x'd. So clearly, the appetite both at the bottom end of the market where people are entering and buying their first stock, buying their first ETF or investing in their first SIP, that's growing exponentially. And the people who are actually becoming informed enough and comfortable enough with disposable income, wanting to actually play in the more sort of sophisticated products, that's also growing exponentially. So I think the penetration levels are still so low that I think there's room for a whole bunch more players to actually play right now. There'll be very large swaths of people that go up the value chain, and they will want even more sophisticated solutions that are not just backed by a fund manager telling them. They will want a machine telling them. They'll want quant models telling them. They'll want what a hedge fund is able to do to be available to them. So the democratize of the knowledge part of the broking market or the wealth market is still ahead of us. Access has got democratized. Knowledge is not.
The very model has the word discount in it, right? And we're talking about very low fee structures, which is what discount broking is based on. Will revenue growth be a challenge in this? Because there's intense competition. One, the rates haven't really moved in the last 5-6 years or so where we've seen this model emerge. So do you think from that point of view, this will be able to significantly contribute to PhonePe's entire revenue growth story?
Two-part answer. In this particular space, everything was 0 to begin with, and then Grow made it 20, and then everyone else has followed. So cash trading, I mean, it's $20 a pop. So that's more than I've ever made on payments. So that's attractive enough. 20 rupees.
That's a public good, right? That's
I know, right? No, but I think jokes aside, you're right. I mean, no, we didn't call it a public good, but UPI has become a public good. And as the largest player there, I think we have managed to prove to ourselves, if not the market, but at least to ourselves, you can play on really sort of snack size margins if the volumes are very, very large. Right? God knows, I think we've proven it out for ourselves on payments. So I think as long as your contribution margin is 70, 75%, that's the kind of range you need to play in, your revenue can go a long distance. I think there's a lot of focus on the revenue being high, but then the cost of revenue also needs to be low for that margin to open up. I think with platform plays inherently, whether you charge $10 or $20, as long as the margin is high, then it's a question of you have to multiply by number of transactions. And I think, again, we fancy this sector as one way we can make a lot of money because there's a few tens of crores of people that we think will join this market in the next 10 to 15 years. The advantage, we can take a 10 to 15 year view. I think that's the big difference.
All right, so you're hoping this in the long term will be a volume game, and these new to market investors is what you really target. But before we close, PhonePe, I remember earlier when you launched your e-commerce app, you said anything that can be done on the phone we'll do. And you talked about consumer lending being the next area of focus. Will that close the bouquet, or is there something else that is also on your radar?
I think, geez, if you can close with consumer lending this year, I'll definitely personally just call it a big win and just stop there, because that'll complete the dozen. Yeah, it's been that busy.
And how soon will we see that happen, consumer lending? And what's your plan on that front? Again, a very intensely competitive market.
I think we've already said that we will enter with personal loans, so that's a given. We will also be entering with UPI credit, whatever flavor that takes. We've also entered with Rupee on UPI. We're already seeing very good traction there. So I think the sort of UPI Rupee story will open up. The PL story on distribution will open up. Some flavor of BNPL is going to come in. how that looks.
Will it be through an acquisition? You've tried that earlier with Zest.
I don't think so actually Zest Money, we didn't do the acquisition, but we bought the consumer side IP, and good number of the team members are with us now at PhonePe. And so that's the team that's actually looking at the consumer launch right now. So will BNPL come in? Yes. Will there be some flavor of FLDG now that it's legal? Maybe.
5%.
Yeah, I think maybe, but I think what we are certain of is we will not be doing it on balance sheet. We will be working with NBFCs and banks. So it'll come soon enough. I think we are very clear. We flirted with NBFC, we flirted with the AMC. We are doing distribution. That's what we're going to do.
Sameer and Ujjwal, a pleasure speaking to both of you, and all the very best with your new launch. Thank you.
Thank you. Thank you so much.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.